Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the week of Sunday, 11/12/2023. I might get this out on the 11th, but I didn't change the date there. My email address is hgsidoc@gmail.com. If you are new to my channel, welcome. Please hit the subscribe button, hit the alarm, and you'll find out when I post these. If you're not new, welcome back. I titled this session Strong Finish as the broader markets lag on the week, and let's take a look at what we have. As always, this is for educational purposes only. Anything I recommend in the spirit of education should not be considered investment advice. I'm a doctor, not a broker. In fact, I have none of the licenses that I would need to actually provide investment advice. So this is just education. I am independent. No one pays me to say good things or bad things about their tools. I show you what I use and how I use them, and I've paid for the tools that I use. Trading involves risk, and you are solely responsible for any investment decisions you make. If you like these but want something shorter, every day, Monday through Friday, I will post when available a short video on stocksanddocs.com where I take a quick look at the market and find at least one stock that I might be watching as the market opens later that day. Major markets tell the story. You could see Bitcoin had a super strong week, up 10.8, while natural gas was down 12. In yellow are the major market indices, and they were mixed because the Russell was minus 3.1 and the NYSE was minus 0.6 for the week. The leader was the Qs at 2.9, the Nasdaq's at 2.4, the S&P at 1.4, and Dow minimally positive at 0.7. You should also notice that much of these gains came from action on Friday. In fact, without that action on Friday, the Dow and the S&P would have been negative on the week. From the S&P 500 sectors led by technology and communication. This is a Q-Edge tool by my good friend Sagar, superiorprofit.co. Look for his YouTube videos as well. He uses the S&P 1500. And what we can see is in the S&P 1500, interestingly, on Friday, all the sectors were positive. You could see 86% of the industries were up and 80% of the stocks were up. So clearly it was a good day in the market. What's interesting, sorry about that, is when you look at the 5 days of the S&P 1500, remember this is much broader than the NASDAQ 100. You have 91% of sectors were down, 73% of industry groups were down, and 69% of stocks were down. So even though Friday was a great day for the longs, it was a more challenging week overall. Here's just another way of looking at market breadth. This is a composite of all the major U.S. indices. Here's the NYSE, here's the NASDAQ. You'll notice this yellow with a 1 that tells me you had one index that had accumulation, the green dots accumulation. This is the second one up, which is the NASDAQ 100. We've also had several days of fairly broad-based accumulation going back over the last week. What's probably more important to me is I don't see any red. This is a tool from Nick Drendel. Find him at this email. It's less than 50 bucks, and it gives you a sense of what's going on in the market. To me, the highlight of this is showing that even though the markets had some positivity this week, if you look at the new highs versus new lows, they're not supporting this market. Now, markets can still go up and get narrower and narrower. I, for one, will feel much better, excuse me, when the markets broaden out. And whether you look at a 1, 3, 6, or 52-week window, the NYSE and the NASDAQ are negative. Leaders on the week were software, semiconductors. Interest on Friday, rather, was software, semiconductors, home builders, cybersecurity, discretionary. Over 5 days, leaders were software, semiconductors, and cyber and internet. So very technology driven. Rates were mixed after auction and debt concerns. You could see the 10-year was up a few ticks while the 30-year was down. So I call that mixed. Is there a recession in our near future? I suspect that I have a hard time believing the economy is going to tank in an election year without a lot of work being done by those in power. So maybe after we get a new president, whether it's the same one reelected or the other same one elected again after being out 4 years, I think they're going to have to deal with some issues. The debt being a major problem. But looking at the yield curve inversion, every time it's dropped below the zero line going back to the 80s, you've seen a recession. You don't see the recession until it gets back above it. It's not always immediate. So we've gotten closer to the zero line on the 10 minus 2 and the 10 minus 3. Those two would argue that things that have happened before probably going to happen again, and we probably do have a recession. Why I don't think it's imminent? Well, the Fred Diffusion Index shows there's still plenty of economic activity. We're not below the minus 20 line, and there's not the evidence of tightening credit or rapidly tightening credit. Breadth was a bit better. I really don't think I'd say that, and I meant to change that. I would say breadth was relatively unchanged and actually maybe a little bit worse on the week. Friday was a tricky day because Friday things felt a lot better. But you could see on the weekly chart, stocks above the 200, stocks above the 40 dipped a little bit, and the 12-week new high, new low dipped as well. All of these tell me we have no significant signal. Breadth diverges from indices. And I think I meant to put that over there because the breadth weakened, although the industries were higher, indexes were higher. The buckets tells me that 62% of stocks are above the midline, their Bollinger Bands, and we're not extended to the downside or the upside, so no signal. I wouldn't expect a Hindenburg omen here. We didn't get one. I'm just looking at those new highs. 6.62% is much higher than it was a week ago on the NASDAQ and mixed on the NYSE, which has been holding up better from a new high, new low for quite some time. You can see we are moving from the lower left to the upper right on my group performance or tool. And I'm looking at the performance of the stocks by their ERG. ERG is EPS rank, relative strength rank plus group rank. Higher the ERG, the better performance. So even though the markets were generally down on the week, the strength we saw was in the higher ERG stocks. And you could see down here that, and these are all negative numbers, but as your EPS rank, your relative strength rank got higher, your returns were better. This is a major week for Fed speak. And think about what happened, I think, on Thursday. Powell came out and didn't sound as dovish as the markets wanted it to. And in a few minutes, we're going to look at the chart from that time. And that has to tell you something. Is the Fed going to talk down the markets here? Well, look at how many in the red arrows of confirmed Fed speakers we have for this coming week. Now, we also have some CPI, PPI, jobless claims, import prices, home builder confidence, permits, building permits, etc. So this is a busy, busy news week and a lot of Fed heads, which I think we've seen in the past. They can cause some movement in the major indices. Still another week of big earnings, and if you have a stock on here, this matters. It's a judgment call to hold your stocks over earnings dates. It's bad judgment to just go in blind and not know when your earnings dates are scheduled. So we digested the prior week gains and finished mostly higher. The MGK had the best of the major indices, up 3.4. The Spider was 1.3, and the RSP actually was down minus 0.6. Leadership, as I showed you, technology and communications. Semiconductors, when you start looking at the charts, are in control. We saw a jump in rates following some Thursday auctions along with commentary from Fed Powell that slowed the rebound momentum. And again, I think the rates were mixed, but you can see the 2 years and the 10 years both rose a little bit. It was a 30-year that actually dropped some. My market timing model, which we'll go look at momentarily, has gone to a buy for everything except for IWM. And I think the market's going to be paying attention to the news and the Fed heads. So I committed more funds the prior week after the follow-through day. I'm not all in. I'd rather see broadening of leadership, but it doesn't mean the markets can't go higher. I remain cautious. I keep some cash on the side. And the longs I have tight leashes, which means smaller position size and relatively tight stops. Again, if you like this type of analysis, of which I don't charge and don't plan on ever charging, you can go to stocksanddocs.com on a daily basis to see what I'm thinking. So here's my market timing model. For those that might be new to my channel, I look at a 30-period WMA and I look at a proprietary indicator called the Bongo, which is my trending indicator. When price is above the 30 and the Bongo is green, you get a buy signal. When price is below and the Bongo is red, you get a sell signal. So we have gone to a new buy signal. We were in caution last session. If we look at the Qs, new buy signal after being in caution. If we look at the diamonds, a new buy signal. And if we look at the IWM, nowhere close. We're definitely still weak on the small stocks. If I go into the indexes, so this happens to be a 5-minute chart of the S&P 500. So Monday traded down, ended a little bit lower. Tuesday was a strong day, ending considerably higher. Wednesday pulled back, but kind of closed where we opened. And then Thursday happened. And Thursday was going fine until this hour, 1 o'clock, when Fed's had Powell's comments came out and sunk the market. For whatever reason, the market rebounded at the open Friday, and after a short sell-off shakeout, the markets closed near their highs. If we look at the spider itself, what I'm watching here is we're in this channel here. We bounced off. We're running into potential short-term resistance, but a break above this line probably doesn't, well, a break above this line will probably take us into potentially a 455 area, but we still got to get through this area where we're at right now, and this line's at about 442, 443, so it's pretty close. So highs for this move will go back here at 458. So a break above this line here, maybe we're going to go and threaten those highs. So bullish or bearish on this, cautious. Cautious because of that resistance line close above it. Like the MACD looks great and we're not extended. If we look at the other major indices, gotta love the Qs, a massive breakout from their channel with a wealth signal coming in on Friday, and all the bongos are green. The diamonds took out their descending channel. The one laggard here is the Russell, which is just lingering well below everything and sitting in between the January lows here and the October 22 lows. Volatility, let's make sure I got the right day. Yep. Volatility was weak, and you could see it sold off hard on the week. In fact, volatility was down 5% on the week after a prior week being down 29%. That goes with a market that's doing better. The dollar's in a trading range and it closed directly in the middle. Commodities, gold and silver have come down. Is this because people don't think we have as much risk in this world? It's hard for me to believe that. It's not because the dollar is getting that much stronger. The dollar is kind of flat. Maybe it's just a concern over the worldwide economy slowing down. If we look at oil pulled back to the 200. This is probably a thing about supply versus demand. We know the supply's been tightened with Iran and the Saudis cutting production. But I think with a potential for a upcoming recession, maybe there's a little bit of concern about demand. Natural gas remains dead, and the 10-year broke through the wedge, pulled right to where you'd expect at the 50. And right now it's just running up the 50. If we look at the hourly sectors, the true king here is XLK. That is not a surprise. It's been leading the market for quite some time. The Fangs versus Spider, much favoring the Fangs as well. When you look around, communications looks okay. There's not a lot that looks okay here, and I was hoping, discretionary is trying to, but it would be a laggard in my mind of looking okay. XLV has been down in the dumps, as have been staples, real estate, and utilities, the types of things you think to do well if this market was in a concern about a recession. All right. Next thing I like to go to is into my scanners, and let's just take a look at the heat map. And you could see Friday was a good day. So the S&P was up, and you could see broad-based positivity on Friday. I mean, the one thing that does stand out to me is Regeneron, Merck, Edwards Life Sciences, J&J are all healthcare stocks. It just shows continued weakness in the XLV. Another way of seeing where the strength is, just look at Wealth Scanner and let's see what comes to the top. This is a bullish sort because if I'm long the market, I don't want to be looking necessarily at just shorts. So what comes to the top is XLK, and you could see a beautiful break not only on some of the indexes, but here's your industry group or sector breaking out. Now it's already run a lot and probably is going to struggle at 181, which is not that far away. But right now this is the leading at 820, 850 is the most you could get. We got Brazil, we got internet, we got semis, Latin America, aerospace, but notice we've now dropped below 700. Now there are a lot of things that you could do to see what's leading. What I like to do is I like to use my scanner tool. So my scanner is called the CAT scanner. It's a marketplace indicator or scanner in wealth charts, which means you have to pay for it. The indicators, many of them are actually free. And what I tell people all the time, it's really the scanner that is the big difference maker for me. So since we saw technology was strong and semis, one thing I might want to do is just come down here and see if I have a sector or industry group of semiconductors. And I do, or else I would build one. And what I want to do is see, did any of those semiconductors meet my scanning criteria? So those who don't know me, I make my money in the markets. Again, I'm not showing you my statements. This is just a broad-based comment. But I've had my best success in buying stocks in an uptrend with a pullback to support and a breakout. I have developed indicators that look at things such as gap, volume, breakouts, momentum, and use those to help guide my eyes to help me find the charts. And then I do everything based upon support, resistance, and chart patterns. So the first one that comes to mind is TSM. So I built a scanner. It's looking for stocks that are 5 and 500,000 shares minimum, at least one bullish dot, no bearish dots. I'm looking to see the Bongo Daily has changed within 9 days, so that's a short-term reversal. And I want the current Bongo Daily to be bullish as well as the weekly bullish. So uptrend, recent pullback, and now going higher. So here is, I guess this is an example of it, although it's a little bit less perfect of the uptrend, but yet uptrend and a pullback. I'll give you a better example as we go. However, TSM looks interesting because it's beaten up, it's in the right sector, broke out above its 200 on massive volume, gap, breakout momentum, relative strength and OBV look great. Its earnings were back here, and we don't have those yet for whatever reason. So Taiwan Semiconductor, ASE Technology. This is a big company. Don't know much about it, but they have a couple $1 billion of revenue per quarter. This one also had a nice breakout from this area here. 3 dots on volume, relative strength, and OBV look good. Synaptics, wow, big move, took out the 200. Don't know much about that one. But what I do want to point out is AMD, and I almost talked about it last week. It coulda, woulda, shoulda. But AMD has had a nice move over the last several days. It's not meeting extension by the high jump. And what I want to show you about AMD is a little bit about seasonality. So let me just adjust this just a bit. All right, there we go. I want to move this 1 week forward. Actually, no, I don't need to because it's next week is the 13th. So I'm on the 7th. There's the 14th. Okay, Let's take this to the next expiration. So this is going to look at the type of move between November 14th, which will be Tuesday, and December 19th, which is option expiration day, I believe, although I'm not sure, but it's the third week of December. It's probably not, since that's not a Friday. And then I'm going to look at NASDAQ 100 and 4-week performance, and AMD is interesting here. AMD is up, well, it looked better last week. Yeah, when I looked at it last week, let me just move this back a week to what I was talking about. It was up 7 out of 10 years, an average return of 7.13, and the last several weeks was positive. But what you could see here is that we are in a strong seasonality period of time for AMD, Micron, AVGO, AMAT. These are all in the technology space. So we go back to, just remove that. Yep, let me just reset this again. So AMD, it's probably run too much for me, but last week I looked at it. I liked its seasonality, but coulda, woulda, shoulda. All right, perfect. Let me just show the EMS indicator. Awesome. All right, so looked at some semiconductors. If I look at technology components as well, broadening out the tech space, and let's look here. You can see TSM, Vizio Holdings. They make TVs at Costco. That's all I know. Must have had earnings, did have earnings. They're probably not in the program yet. Nice breakout, still below the 200. Applied materials look good. Um, draw a trend line. Let's just see if we broke out above the trend line from the last two. We did. Good volume, breakout momentum, relative strength at OBV looks good. Not currently overbought by the high jump. Adobe's another one that's been on a great run. Now this one's a little bit more extended. I'd rather buy things closer to their base or their moving average, but you can't disagree with the strength of Adobe. Look at the run that it's had. All right, AVGO is another one that looks great as well with a nice fresh breakout. So all I've done is I've ranked the stocks in the technology by my dots indicator. Now, I like looking broader, so I create a list called the combo leaders list, and I build this from a lot of lists that you might be familiar with in Investors Business Daily and MarketSmith, some of my own scans from HGSI, TradeStation, Thinkorswim, and Wealth Charts. And I take all the bullish stocks screens and I put them in one list, put all the bearish stock screens and I put them in one list. And then I start my week by looking at that list for finding things to buy and sell. So when I do that, a non-technology play comes to the top, and I got to admit, I like this play. This is Copart. I believe they're in the auto parts business. I don't really care what they do, but I do like what it did here. So you had a breakout above a 3-touch trend line on great volume with a gap, breakout momentum. All your bongos are green. You're not at 100% on the high-low jump, and your relative strength and your OBV, the green and the blue here, look great. So I like that one. Hologics is a med tech company. Now this is in a beaten down sector. This is up on earnings, which we won't have. Breakout above the 50, seeing a run 10% move up to the 200 would not surprise me. Here's Taiwan, here's Vizio, here's Applied Materials, here's that ASE. Just another one of these technology plays. Now I don't know anything about bell ring brands. It's just not in the industry group that I typically play. But wow, what a big move. And what else can you say? Except they've got earnings coming out up here, so you got to be careful. VRRM, again, not a stock that I typically play, but I did pay attention to it here. Kind of a belt hold with a bullish engulfing pattern that went back, gosh, a month on the highs and the lows. A Good volume, breakout momentum, relative strength and OBV are perking up in relative Smith. This could be one thing to look at as well. Don't know much about the company. Autodesk is kind of too loosey-goosey for me. Costco also looked interesting. This thing has had a major run, but if you look at it here, it's sort of been sort of living in a box. Is it ready to break out? Certainly one thing that I'm going to be watching as well. So I guess the message here is, let's look at the FANG stocks. I think I have one of those. If not, we'll type them in individually. Let's just look at these market leaders. Applied Materials. Breakout above trendline resistance looks just like XLK, probably still actionable. LRCX, another breakout, probably could put a trend line here. Expensive stock. Adobe we looked at. AMD breaking out and running. Is it getting extended? Not yet, but it's already moved some. AVGO, new highs. Costco, will it break out of this box? Microsoft, all-time highs on Friday. All-time highs typically go higher. QCOM, I remember when Qualcomm was the word of the day at CNBC for months. Nice move up here on earnings and now moving higher. S&P Global, a nice breakout here and moving higher. But I thought I was getting the straight FANG stocks. I wasn't getting the straight FANG, so just let's look at them. Let's start with Facebook, now known as Meta. Kind of looks like it's getting close to breaking out to recent highs. What a run this thing has had from the mid-80s. Is this actionable? Probably still is. How about Amazon? All these are getting up to potential double and triple tops, but Amazon still looks good with a good move. What about Google? Got to get above the 50. What about Netflix? This was the first one that ran. Netflix is running again, about to get to the fun season of the year on Netflix, and we'll go back to that in a second. What about Apple? Comes out crappy earnings, sells off after hours, and now is trading higher. Apple seems like it wants to go higher. So all of these look pretty good. I kind of like Meta. Now, I did want to talk, and let's look at the big daddy of the era, which is NVIDIA, another major mover this year. And they've all got the same pattern, but it kind of looks repeatedly. And again, very similar pattern on many of these leaders. That they've broken above trendline resistance. Now, let me just finish with a comment about Netflix. If there's one stock that seasonality has put on the map, it is Netflix. The best seasonality of the year, no surprise, occurs in January. In fact, this is a run from the beginning of January through the middle of the year. So let's look at this, and what it shows me, let's just do a quick short move, that if I buy this in the beginning of January, and I'll have to see when earnings are, and hold it, let's go to the 30th. All right, so we're looking at January 3rd to the 30th, 7 gains, 3 losses. This historically has been one of the big times of the year to buy Netflix. Now you could see here that has a little run up and then gets choppy. Now I don't buy because of seasonality. I like to buy stocks that have good patterns that have seasonality. So let's just go back to NFLX And let's go back and let's look at a year ago. I think I did an educational program end of last year. Let's see. I would have done my program around December 5th. So I remember we talked at my program in early December. But if you look at that January or December 30th date, which is when the seasonality starts, and you run it to, let's get the measuring tool. So if we start here and we run to, let's see, 120, and this must be the week they had earnings, you had a $49 return or 17%. If you go back in time, and there are programs that I have that will I can look back every year during this period of time, you'd probably find that Netflix has had more than a 10% move over that period of time, the last few trading days in December to the Friday after the earnings report in January. And the likelihood of beating earnings and going up will be probably something like 15 out of 17 with an average of at least 10%. This past year, and we did rally into the beginning of the year in 23, was no different than others. Um, so, and you can see I had drawn this out here at a different meeting. But bottom line is Netflix seasonality is coming. If you're into seasonality, I still think technicals are more important. So let's summarize my thoughts for the session. My first thought is the markets held up remarkably well this past week despite um, potential adverse news. However, the markets didn't hold up as well underneath the surface as they did in the top line because when you look at IWM and the RSP, clearly there's laggards. So it's not a perfect market. In fact, breadth got a little bit worse. We are not overbought. We are not oversold. We did trigger a new buy signal on my market timing model, which is a big positive. As I look at the market, there are still plenty of nice looking stocks, but with the broader market being down on the week, it becomes a narrow list and a narrow list around technology. So I still think technology makes sense. I also like Copart. I am a little nervous going into this week because we still are a little bit overbought, but I'll trade the market we have, and right now that says stay to the long side until it says it doesn't. Have a great week in the market, and I'll see you Monday at stocksanddocs.com.